Hello, thank you for joining me today in the crypto simulation where we are going to make so much money this year. Now, what I'm about to tell you is not financial advice, shouldn't be taken as such. I'm not a financial advisor, and you should always do your own research before believing anything you hear on the internet, including stuff from me. But I feel like I have a pretty valuable presentation for you today. It's going to be a little different than what you're used to seeing in crypto channels. I am going to teach you how to become a better investor. And I think the skills that you're going to learn in this presentation are in some ways more valuable than what you would learn from one of my standard crypto videos where I talk to you about charts and such. I'm not going to do that here, but I'm going to teach you techniques and strategies that you can apply to become a better investor. And this material is so valuable. I would encourage you to save this video, share it with your friends and family, and be sure to come back and watch it when you need a reminding of the things that you need to be a successful investor. Sorry, I was just figuring out which button to press. So these are my social links. I actually just opened up a Telegram group called the Sneck Pit. That's THESNEK Pit. I am available on Twitter, or X as it's called, at the Gaussian Sneck. TikTok, also the Gaussian Sneck. I have links to those social groups in my bio. My Telegram group, I actually just opened up yesterday. We already have over 40 members that signed up in the past 24 hours, and I haven't even really advertised it yet. I would encourage you to go over there. You'll find me and some other very remarkable investors, developers, and other great people that you can join in with. It's completely free. So be sure to go there and complete the CAPTCHA, which is just a way of verifying that you're human, and join us over there. And you've probably noticed by now, if you do follow me already in the Telegram group, that I call myself the Nova DAO Sage. And I plan on doing videos about Nova DAO, but I just wanted to give them a shout out. Their website is novadao.io, and I will just fully disclose that I do own the Nova DAO token, and I am a huge believer in this project. And just to kind of be brief about this project, it was started by one of the lead Dogecoin devs, Owen Hayes, and it is probably one of the finest DAOs, decentralized autonomous organizations, self-governance, a model of self-governance. They've got GameFi in there. They've got they're working on a stable coin for Dogechain, and they've just got a great community of people. So I'd strongly recommend you check the DAO out, and I'll post links to it in my video description. More on that in another video. So let's talk about investing. Investing is a deeply personal journey, as you very well know. Nothing can trigger emotions quite as much as losing money, gaining money, or just getting bored watching your money go nowhere. And I think you hear a lot of people say, oh, you got to be like a robot. You got to be like a machine. And while that sounds idealistic, and we would love to be like that, we cannot escape our emotions. And I am not going to encourage you to ignore your emotions like a lot of other financial gurus would do. I'm going to tell you to get to know your emotions and learn how to work with them instead of working against them. Because when you push your emotions away, you just move further and further away from yourself. So the best investing strategy is a finely tuned balance between risk management and emotional maturity. Why do most people lose money in this game? 99% might be a slight exaggeration, but it's pretty close to that amount. Crypto seems so deceptively simple when you get into it. I'll just put a few dollars into this project or that project, and I'm going to watch it moon. That's what we all think when we come into crypto. And then we realize it's not as easy as it looks. Being a good investor is not easy. And in fact, I would argue that being a good investor is often a temporary state of mind and being. You have to work at it constantly to remain a good investor. The best investors don't think that they're great investors. They think they can always improve. 99% of people lose money in investing, crypto, and probably investing in general. Number one, because of a lack of self awareness. They don't know themselves. They're not aware of their own personality, their own limitations, what they respond best to. Are you somebody who is very patient? Are you somebody who is impatient? Are you somebody who gets angry easily and frustrated and upset? Do you have a tendency to paper hand and switch things up all the time? So number two is emotional and financial insecurities. So it's hard to be a good investor when you have a lot of trauma going on in your life. When you have things that are causing you stress, it's really difficult to be your best investor. And again, this doesn't mean getting control of your emotions. We can't control our emotions completely, but it means learning to recognize your emotions, be aware of them, and know when to stay away from that buy and sell button. Financial insecurities. So if you're desperate and you feel like you need this money now, that tends to lead to dangerous situations. Poor self-discipline. If you're not practicing the art of learning to wait and telling yourself no for things sometimes, it's hard. Number four is the herd mentality. This is just blindly following the advice of others and what you see on TV and what you see in the news, falling for narratives and acting on it. Failure to research projects, just buying things because the name sounds cool. That can actually work out sometimes, but more often than not, it's best to actually research your projects. The two most challenging things to deal with in crypto, in my opinion, from my own experience, are hindsight bias and the paradox of choice. I've experienced both of these. I'm sure you have too. Hindsight bias is that feeling you get when you look back at a chart and you see that, oh my gosh, if I just would have sold or if I just would have bought, things would have been so different. It's looking back at your mistakes and thinking that you could have acted differently. It was so obvious at the time. No, it's not obvious. Go look at any chart right now, pull up a chart, and tell me what's going to happen to it. Do you think anybody truly knows? There are people who claim to know, but you can't possibly know what's going to happen, because if you could, that's why none of us YouTube crypto analyzers can ever get the markets 100% right, because if we could, it wouldn't be called investing. It wouldn't need to be here at all, right? The markets would be too easy. So we can't tell what is going to happen in the future. And what happened in the past, it just, it happened. And we didn't know at the time what it was going to be. All we ever have in technical analysis are probabilities. So please be patient and gentle with yourself. Don't beat yourself up over making poor investing decisions. We all make them. Even the best YouTube crypto analysts out there, they make a lot of mistakes. They just don't tell you about them. And the ones who do, they're the bravest. The paradox of choice, this is a psychological phenomenon that causes people a lot of stress. So to use an analogy, think of two supermarkets. Like when I shop at Safeway versus when I shop at, say, like Trader Joe's. When I shop at Safeway and I'm looking for cereal, there's like literally 60 or 70 different varieties of cereal. If I just want one box of cereal, it can be difficult to make a decision. Whereas at Trader Joe's, there's only maybe 10 or 11 choices. And if you want like Cheerios, you only have one choice, Joe's O's or whatever. You don't have like 15 different choices. And so the paradox of choice is a psychological phenomenon that says when you have too many choices, which we definitely have in crypto, I mean, there are thousands and thousands, tens of thousands of cryptocurrencies and NFTs and other things. It actually causes a lot of stress. It causes us to doubt ourselves, and it can make us just downright unhappy, feeling like we're always missing the latest and greatest project. We've got to have this new project or that new project. There's something to be said about holding on to a bag and sticking with it and not switching it up too much. I'm not saying you never should switch things up or, you know, be searching around and shopping for new cryptos. You don't want to sit back and kick back with your bags if you're not familiar with why you're invested in them, but be careful about falling for the paradox of choice. Now, here's 6 easy steps you can use to improve your crypto game. Number 1, understand your personality, behavior, and habits. This may not seem that important because crypto is all about moving money around, but your investing profile is a direct reflection of your personality, your behavior, and your traits. So if you want to improve as an investor, you need to improve yourself. You need to make sure that you have balance in your life or that you're striving for balance. You need to make sure that if you have psychological issues, that you find ways to work with them and to work through them so that they don't influence your crypto game too much and that you can develop an awareness around them. Understand that the times where you're the most vulnerable are probably not the times where you want to be sitting in front of a buy or sell button. Set investing goals and understand the reasons behind them. Why are you in the crypto space? What do you want out of this? What's your end goal? Is your end goal just to have digits on a screen, or are you interested in purchasing real world assets? I think it's good to have goals and to have things to strive for beyond just having a bunch of zeros in your bank account. You know, if that's your goal, great. But most of us are here because we want to make life-changing wealth that would allow us to do things like retire early or purchase a bigger house or fund our child's college tuition or make it to where our spouse doesn't have to work anymore. Those are the kinds of things that you really need to set as a foundation behind your investing. Number 3 is a very important point. Crypto influencers, crypto analysts, people like myself, we are not your financial decision makers. Do not turn us into a cult of personality. It's very easy to do that, but when you do that, you're doubting yourself and you're letting another voice get into your head. Always have your own voice. Always make your own decisions financially. I think it's smart to watch these kind of videos, to learn from them, but at the end of the day, you have to make your own decisions. You have to find your own voice, and you should be critical of the information that you hear, and you should get your information from more than one source. Now, not many YouTubers are going to tell you that, but I'm here to educate and empower. I'm not here for any other reason. So I want you to really think about that one. Who is your financial decision maker? It should be you. Number 4, I learned this from a friend in a group, one of my Telegram groups, to view mistakes as learning opportunities. I'm somebody who is very hard on myself when I make mistakes, and that's just part of my personality, but I've learned to ease up on myself some. You're going to make mistakes. You're going to lose money. It's just a given. Just accept it. It's going to happen. Go back and see, why did that happen? You know what? It could just be bad luck sometimes. Or it could be you pulled the sell trigger too soon, you pulled the buy trigger too soon, or pulled the sell trigger too late. Or waited too long to buy, set the limit orders too low. Were you being too deterministic? It's very easy to do. There's this phenomenon known as confirmation bias, where we see what we want to see in the charts. And we assume something has to happen. I've done this. I still do this. You could go back and probably find one of my YouTube videos. I only have 10 of them or so at this point, and you could probably find instances where I've let my own confirmation bias cloud my judgment of the charts. It happens. It's going to happen. Be aware of it. Use it as an opportunity to learn. Physical, emotional, and spiritual health are essential to being a good investor. Take care of your body, take care of your emotions, have a life outside of staring at charts all day. It's okay to have days where you're glued to your screen. I get it, happens to me. The past few months have been pretty rough, but work out, go for a walk, go get something to eat. Don't sit in front of the computer or in front of your phone all day analyzing charts. That's just going to give you anxiety, and it's not going to really do anything except possibly lead to making you make poor decisions. You must be healthy physically, emotionally, and spiritually to do well in the crypto game. And lastly, if you want to be healthy emotionally, physically, and spiritually, please set a limit for how much money you'll spend. Now, that's going to be different for everybody, but you need to find that limit and you need to stick to it. So if you, let's say you had $100,000 in your bank account set aside for crypto and you were willing to go to $20,000, don't go below that. You get to 20, you're done. You're just done. If you need more money to DCA, then you'll have to find another way to do it, or just wait and be patient, or find a project that is just complete crap that you invested in, and maybe find another home for it. There's 3 small actions that you can take that go a really long way. I don't know that all 3 of these are really actions per se, but I'll bring action words to them. Number 1, don't try to time bottoms and tops. Being too greedy will get you in trouble in crypto. It will lead you to missing out on profits. So if you sit around waiting to put money into a project and you're going to just lump sum at some bottom, hypothetical bottom, or you're going to take all your money out at some hypothetical top, the chances are you're going to miss one of those. The market is unpredictable. There are millions and millions of participants in the market at any given time. Do you think anybody can read their minds, what they're going to do? There's bots in the market too that are making trading decisions. That is a stochastic random process. It's not possible to predict what's going to happen. That's why all YouTube crypto analysts get things wrong, because it's impossible to always get things right. So you want to create a spectrum. You'll hear me in my videos talk about a bottoming range or a topping process, because that's where I like to do my buying and selling. I will, for instance, Mubi has been not doing so great recently. Multibit, if you're not familiar, I did a video on it a little while ago. I thought that 10 cents was the line in the sand, and I think that was probably my confirmation bias. I was right for a minute until I wasn't. I couldn't predict that a whale was going to sell a boatload of Mubi. I woke up to that today. It was like around 9.2 cents when I looked. Most of my buys are north of 10 cents. So I just thought, well, hey, this is good value. I'm going to go DCA some more. And I did. I'm not trying to time a bottom. That bottom may never come. Mubi's in a falling wedge. These things can break out at any time. Another whale could come in and buy up a bunch of Mubi. So we need to recognize when we're in a good buy zone and also in a good sell zone. Also, an action, I guess, is to realize, realizing's in action, that there are infinitely many ways to achieve wealth. You do not have to follow step A, B, and C to get rich in crypto. What you do need to do is adopt a risk profile and a strategy and try to stick to it. But you need to develop one that is individualized to you, tailored to your personality and preferences. That's not going to be the same as copying somebody else, because that's not you. You try to copy someone else, it's not you. It's going to be harder to stick to. Realize that charts do not lie. Maybe let's just say 3 small truths that go a long way. People get so caught up in the news, so caught up in what the Fed is saying, so caught up in narratives. I think it's fine to look at these things, but people move charts. News doesn't move charts. It can. It can move people to move charts. Sentiment moves charts. It's a battle between fear and greed, overselling and overbuying, and trying to achieve some kind of equilibrium. And we can always find a reason why the chart went up or why the chart moved down. And there is a little bit of confirmation bias in that. I'm not saying that external actions don't move charts, because they do, but that external action could be somebody just wakes up one day and wants to buy $20 million worth of movie. And they just wanted to. Is that something from the news? No. Now with Bitcoin's spread out around the world a little bit more than some of our smaller altcoins. So there are big institutional events like an ETF approval that certainly can move sentiment in a certain very meaningful way. But there are infinitely many, I won't say infinite, but there are uncountably many processes at any given time that are moving the market. And the charts don't lie. They're going to be your best read of the market. If you can learn how to read charts, you'll do really well. So what do you need to do? You need to get organized. You need to learn to do your own technical analysis. Do not rely on someone to do it for you. That is dangerous. It's okay to ask for opinions, but make sure that you cross-check those opinions. Start with, it doesn't have to be complicated. Start with just 3 things. Learn about RSI, which is a relative strength index, simple moving averages, like the 20-week, the 50-week, 100-week, and 200-week are some good ones to start with, and moving average, convergence, divergence. If you can just and you know what, there's tutorials online where you can learn about these things. Just start with those 3 basic indicators. That's what I did when I first learned TA, is I started with those 3 basic indicators, and you'd be surprised at how much information you can get from just those 3. Learn what those indicators are, how they work, and how to read them on charts. Learn their limitations too. All models fail. That's why we want to look for confluence amongst different models. It's also good. Part of TA is engaging with people, like my Telegram group, the Snake Pit. Show people your TA. Let them see it. Let them comment on it and go back and forth. There's this one guy that I talk to who has a different kind of TA than I do. He's very organized and disciplined, and he has a rigorous system backed by hundreds of stock market experts, hundreds of experts, or hundreds of hours of expertise. Point is, this is some solid stuff that he does. Sometimes it makes me feel insecure about my own TA, but then I need to remember that he gets just as much out of hearing about the way that I do things as I do from him. And so we bounce ideas off each other. Sometimes we agree, sometimes we don't. But that's the beauty of TA. Make sure you learn fundamentals. Get immersed in the projects that you invest in. I'm not saying to marry them. You're not here to hold this token forever. But why are you invested in it? Do they have a good team? You can look on Crunchbase and find information about their team. Look on their website. Are they doxed? If they're not doxed, does it bother you? What's their marketing like? What are the tokenomics like? Personally, I avoid inflationary tokens. I sold my Pith and turned it into something else because I don't like that it's inflationary. But Pith is doing great right now. Celestia is another inflationary token that is just killing it right now. And I didn't want to invest in it. And I'm getting left behind by it. I'm okay with that. I don't want to invest in a highly inflationary token. But some people do. And in a bull market, to be honest with you, inflation doesn't always matter that much. Because sentiment and hype drives projects up. But you got to decide what risks are you willing to live with and not willing to live with. There's projects I'm invested in that other people would think are very risky. Speaking of which, make sure that you develop and identify and accept a risk profile. There's no right answer to this. You want to be extremely conservative and hold all Bitcoin? That's fine. You want to be a complete degen and hold all altcoins? That's fine too. You want to hold some Bitcoin, some ETH, a few other things? That's fine too. I'm not going to criticize your holdings because but here's the important thing. You can't blame anybody if everything goes south, right? Or if you're a conservative investor, you're not going to make as much money as, as somebody could make being more risky. But you won't lose as much either as somebody who's being more risky, and you'll live with less volatility. So you need to ask yourself, what can you handle? Identify a risk profile, stick to it. Diversify your portfolio, even if you're in YOLO mode. So I'm not a believer in 100% Bitcoin, but if that's what you want to do, make sure you got stocks, you got equities, you got, maybe you pick up some ETFs, like real estate. Find ways to diversify. Again, none of this is financial advice. This is just me kind of talking out loud about what I would do. You're going to have to do what you want to do. Mathematically speaking, there are so many different ways to diversify, but if you hold too many projects, and for me, I consider more than 10 to be too many. I think I'm holding around 6 or 7, and that's it. I'm not going to pick up any more. I'd have to throw something else out because I can't handle keeping track of that many projects for myself. Now, maybe you can. Maybe you have 30 projects and you can keep track of all of them, and you have the philosophy that, hey, if one of them moons, I'm set. Great for you. I can't do that. When you start to add more and more projects, you start to track the overall market instead of, being able to get really great gains from any one of them. So, and if you have too few projects, it's also a problem because then you're taking on way too much risk. If something happened, if you had all Bitcoin and all your wealth was in Bitcoin and something happened to Bitcoin, you're going to lose. So it's good to split things up. I don't think you need to split them up like amongst 30, 40 things, but that's really up to you. Understand that you lose your mathematical edge when you start to get above 10. And even that's a lot. For me, I think 5, 6, 7, that's enough for me. Accountability is so important. We spend all this time getting mad at crypto analysts for giving wrong price predictions and telling us and leading us astray. And, I get it. If you're paying for a service, you're going to get upset. But nobody can hit the buy button for you. Nobody hits the sell button for you. That's on you. You need to take responsibility for your investment decisions. And that actually will help you a lot. Besides, you don't want to blame your losses on somebody else. Then you're not self-aware. You're not going to learn your lessons that you need to learn to make money. Security. I wouldn't store all your crypto assets or digital assets in one spot. Okay, so I think we could do a video on security another time, but there's things like I have my ledger. It's over here, buried underneath the pile of papers. I have, other methods that I use to keep my assets secure. And I think that spreading out your risk, just like you would do with crypto, is smart, but I wouldn't spread it out to having 50 different hot wallets or something like that. Then it gets to be impossible to keep track, but you don't want to risk losing everything all at once. So develop a plan and stick to it, and have contingency plans available in case things, don't work out and you need to pivot. So you can't stick to your plan so rigidly that you end up deep in the red. If you see that something's not working, you can modify it. And what a plan is different to everybody. Unless somebody's asking you for feedback, you should never criticize someone else's plan. That's their plan. That's their journey. Stick to your journey. But if someone asks you, give them feedback. It's really important to understand that all money flows are interrelated to each other. What happens, and this is why I do macro videos sometimes. While I'll look at M2, I'll look at inflation, I'll look at what's going on in the NASDAQ, stock market, etc., etc. What's going on with Bitcoin dominance, ETH dominance, others dominance, stablecoin dominance. What's going on with Total 1, Total 2, Total 3, the different crypto market caps. I visualize the crypto market as a giant ocean with waves and currents everywhere. And I'm just trying to navigate my boat just to that beautiful desert island. But it's hard to do. So much money is sloshing around in all kinds of different directions. And you got Forex markets. You've got this money's sloshing around everywhere. So it's important to see what might be dominating at any time. Is Bitcoin dominant? Is ETH dominant? And if you're a savvy investor, you can prepare for these situations and position yourself to take advantage of that dominance. But as time goes on, things are getting more complicated. Altcoins are taking up more dominance. Bitcoin has less dominance than they used to have. ETH has been gaining a little bit of dominance. So um, it's important to just understand that all investments are interrelated. So this is a zero-sum game. Money enters, money comes out. Okay, somebody's winning, somebody's losing. The idea behind risk management is to balance strategy with emotions. Understand that emotions happen and that you want to understand them instead of running away from them. Make sure that you have conviction, not only in your projects, but in the crypto space in general. If you're sitting around calling crypto a scam and you're just feeling kind of guilty for investing in it, then you're probably in the wrong space. Are there scams in crypto? Of course. Scams in equities as well. I mean, look deep into some of the company's balance sheets. Tell me that they're not scamming. You need to have conviction. You need to have faith and belief. This is what actually runs the markets. The crypto markets are nearly entirely sentiment based. So make sure that you believe in your projects, that you believe that they have utility, that you believe they have a good team and they're making good on or trying to make good on their promises. Whatever it is, or you love their marketing, find something, have conviction in it, and stick through it. DCA strategy. Find or develop a risk metric for buys and sells, stick to it. Okay, and again, that's variable. Some people kind of like to have a lump sum DCA strategy where they throw some money here, throw some money there. Some people like to stick to a rigid one with certain risk levels. Some people make it visual. We have to respect different people's DCA strategies. There isn't one way to do it, guys. There isn't one way to do it. But have a strategy. Whatever it is for you, be aware of it. And stay organized. Use a portfolio tracker like CoinStats. I like CoinStats. Tax software like Coinly that I used to like Live CoinWatch, but I've been using CoinStats. I got their paid version. Works for me. Make sure you keep track of your gains and losses, and you know what your average cost basis is. I know with CoinStats it costs a little bit of money for their premium plan, but I paid it. And just so you know, anything I've mentioned in this video, it's not sponsored content. I'm saying this stuff because I use it or I believe in it, not because some sponsor's paying me, because ain't nobody paying me. I'll share with you a website that I really like that I'm subscribed to for their risk metrics, and that is Polarity Digital. And I'm going to put a link in my description for them if you want to check them out. It's run by two really good guys, Mark and Jay, and they maintain a host of tools backed by sophisticated machine learning algorithms that provide an excellent suite of tools, allowing you to analyze dynamic risk models and DCA accordingly. And they actually have a really nice workbench too. So they have some very innovative and quite impressive tools. And I don't know what the price is right now, but I know that when I signed up, it was cheaper than a lot of other options. And I mainly use their website for their risk metrics. And TradingView, of course. Everybody uses TradingView. There's also something out there called Aurox, AUROX, which is like a free copycat kind of TradingView. But no, I think TradingView is the way to go. It's expensive, but it's worth it. Start with their free plan though, and try it out. It's important to not only qualitatively manage risk, but to quantitatively manage it too. And you can learn TA. If you don't think you can, you can. It's not as hard as you think. Okay? There are different levels to TA. There are different styles, but you got to develop your own. Or if you don't want to develop your own, find one out there that you like and learn about it. Or do both. So, thank you for watching this video. I hope you got a lot out of it. Don't forget to like, subscribe, share, and comment. Tell me what you liked about this video. What didn't you like? Do you agree with the tips that I gave? Do you have other tips of your own? Also, be sure to join our free Telegram group. I don't know where my mouse is. I was going to circle around it, but Yeah, whatever. I can't. You see it on the right there by the snake's mouth. So the snack pit, THESNEK pit when you're in Telegram, and I have a link to. I have a link to it in the video description too. And check out the Nova DAO Telegram at Nova if you want to learn more about Nova DAO. I'll put some information in the video description. And like I said, I plan on doing a video on them at some point as well. So that's all for today. I hope you enjoyed this video, and I hope that it helps make you a better investor.